Hello everyone and welcome to section 4 of this course. In this section, we look at first of our three leading technical indicators in the form of Elliott waves. Even if all three of these indicators are leading indicators, Elliott waves have the ability to forecast trading opportunities in advance. On the other hand, volumes and price action are effective in revealing real-time trading opportunities, as you will see later. And that is why I've decided to offer complete guide to using Elliott waves in your trading in part 1 of the course. Before I start introducing Elliott waves, I will assume that all of you are complete beginners or have very little knowledge on this topic. At the same time, I'm not going to overwhelm you with the technicalities of this principle. Instead, I will teach you the usefulness of this principle in this strategy to your best extent. What you're about to learn is a technical tool which will become one of the most powerful market timing tools in existence in your trading. With that being said, let's now dig deep into the history and introduction to Elliott waves. In the late 1930s, an accountant named Rolfe Nelson Elliott discovered that price action displayed on different time frames formed the same basic pattern called waves. The basic pattern that Elliott discovered was that a market cycle consists of 8 waves, 5 waves with the trend and 3 waves against the trend. With the 5 waves, wave 1, 3 and 5 are in the direction of the trend and are called impulse waves, whereas waves 2 and 4 are against the trend and are called corrective waves. Following the completion of 5 waves in one direction, a larger correction takes place in 3 waves. Now once 5th wave comes to an end, this entire corrective move not only corrects the 5th wave, but the entire 5 wave sequence. And this larger correction is labeled using alphabets A, B, C. Let's look at a basic pattern of complete Elliott wave cycle of 5 waves with the trend and 3 waves against the trend. Now let's study a complete Elliott wave cycle using few examples from Forex markets. The first example we are looking at is of euro dollar on a 4-hour chart. Starting from this significant price top where the red arrow is, you can see that price came down in a 5 wave sequence. Within this sequence, wave 2 corrects price of wave 1 and wave 4 corrects price of wave 3. And once wave 5 comes to an end, we see a larger correction which corrects the entire 5 wave decline on this pair. Now the 5-wave decline was in the direction of the trend, whereas the 3-wave correction is against the direction of the trend. This example shows how an Elliott wave cycle looks in a bear market scenario. Now let's study the same but within a bullish market. In our second example, we are looking at a complete Elliott wave cycle in a bullish market on 4-hour charts of US dollar and Japanese yen. Starting from this significant price bottom, you can see that price rallied in a 5-wave sequence. Once again, wave 2 corrects the price of wave 1 and wave 4 corrects the price of wave 2. And once wave 5 comes to an end, we see a larger correction in the form of ABC. Because we are looking at a bullish market, 5-wave sequence is in the direction of the trend, whereas the 3-wave correction is against the trend. This is all you need to know for the time being as we continue studying more about Elliott wave guidelines. Elliott also discovered that price action formed the same basic patterns regardless of the time frame. The patterns come together to form similar but larger patterns on one larger time frame. For examples, the patterns on 4-hour charts link together to form similar patterns on the daily chart, and which link together to form similar patterns on a weekly chart, and so on. Elliott associated these different time frames to different degrees as follows. Guys, I've added the time frames which define each degree within Wave Principle on a MetaTrader 4 platform. Now let's study this key guideline using the same examples to explain the wave pattern on one larger time frame or degree. Once again, we are looking at 4-hour chart of Euro Dollar, which we use to study the complete wave cycle. Now to see how this pattern forms a part of waves on larger degree, we switch to daily charts. And as you see, the entire 5-wave move on 4-hour chart is a part of wave 1 on daily charts, and the entire ABC correction on 4-hour charts is a part of wave 2 on daily charts, or on one larger degree in this case. Now let's study our second example to study the same guideline. In this example, once again we will switch to daily charts to see how the entire wave count looks on one larger degree. On daily charts, the entire 5-wave sequence forms the part of wave 1 and ABC sequence forms the part of wave 2. Based on our wave count, this pair represents a very nice buy opportunity, but we study more about that in the next lectures. Now some of you who are new to Elliott wave principle might be wondering how it is possible that price moves in similar patterns in stocks, commodities, currencies or any other freely traded market. Elliott explained this by saying that freely traded financial markets are not influenced by outside forces but are instead a result of collective psychology or crowd behavior of its various participants. In this sense, the wave principle is not just a trading and forecasting tool but also a detailed description of how markets behave. Guys, please listen to this next information on wave principle carefully, as I am using the exact same text as used by Elliott in one of his writings. He says, "It is doubtful if the waves of low degree are of much practical value. Since we are interested in the broad analysis, we will base our analysis on intermediate degree and up. This means for wave analysis we will only use 4-hour and above time frames later in this strategy. This is what we have been studying so far in this course. There is an opportunity to beat markets on larger time frames, whereas trading on smaller time frames is not ideal." Although Elliott made no direct relation with manipulation of price action on smaller degrees, he discouraged use of smaller degrees to correctly forecast the true market direction using Elliott wave principle. This also brings an end to this lecture on Introduction to Elliott wave principle. Please go through this entire lecture once more to understand the basics of Elliott waves before we progress to study the use of Fibonacci ratios within wave principle and 3 key rules to consider while labeling waves on any trading instrument.